Hello, listeners. Welcome back to another episode of Quote Unquote with KK. I am now closing the season of 2021. And if you recall, we had done a mini real estate series where we had invited leaders from the Indian real estate sector. Karan Virwani had spoken about the future of commercial real estate and co working in India. And then we had Dr. Ashwinder, who spoke about the future of residential real estate in India. And today I have invited a doyen of the Indian real estate industry, Anuj Puri, to our podcast to wrap up this mini series. For those who don't know about Anuj, let me quickly walk through his profile, which is very illustrious. Anuj started his career in real estate and he is currently the chairman and founder of Anarock. Over the last 30 years, Anuj has worked with various real estate companies. Until February of 2017, Anuj was the chairman and country head of international property consultants called JLL India, and he was overseeing a team of 9,000 employees across 11 cities. At JLL Asia Pacific Group, Anuj was the leader and also head of global retail and leasing board. Anuj also has been on several industry forums like the FICCI and also on boards of various other institutions and companies. He has also been part of the industry group CREDAI, and Anuj holds several honors and awards and citations from various publications and institutions. Welcome to our show, Anuj. It's a pleasure hosting you on Quote Unquote with KK.
Thank you very much, Kapil. It's a delight to be on your show. I'm looking forward to our conversation over the next half an hour or so.
Great. There are two very critical issues in the minds of investors. What's happening in China, and is Evergrande the another Lehman that's going to poop the party of inward investments coming into India in the next year or so? What's your take? There are a lot of things being written in the media, but I would love to get it out from your side. What's going to really happen?
So, Kapil, it's a worry that many of us had a couple of months ago when we first heard about Evergrande default that was going to inevitably happen. And the thought was whether this is the beginning of a Lehman crisis, because during that time also, this is how it had all started. And then it bundled into real estate, and Evergrande being a real estate developer amongst the largest in China, did it mean that it was beginning of another global financial crisis? Having said that, very quickly, within sort of a week or 10 days of that news, Kapil, we discovered that this wasn't going to be another Lehman crisis on several accounts. One, from the time when Lehman had happened, yes, the quantum was the same between Lehman and Evergrande defaults, but the global economy has grown significantly. So as a percentage, it wasn't as significant as at the time in 2008 Lehman was. So Evergrande, given the overall global economy expansion since 2008, it wasn't as a percentage reflection, a very large proportion of the global markets. The second was that this was largely limited to China, and it wasn't as much of a free market issue as it was pertaining to China. Many of us know that there has been a fair amount of investment into real estate that has been done in China. A number of houses have been apartments have been constructed. They remain unoccupied at this moment in time, and it does look like there is a sort of a bubble on the residential market that has been built in China. So that's also a reflection of what has happened on Evergrande. The good point, however, has been is that if the Chinese government wanted it not to fail, they could have easily protected it. It isn't a big game, but they said is let it go through the free market forces, and that was very good from the perspective that they let Evergrande go down without really interfering. in that, and that sent a positive sentiment into the market. And lastly, given that this is a lot more local in China, the impact of this wasn't felt on many global funds. As a result of which, they continue to do their normal course of business, and their business did not get disrupted because they had not any meaningful stake within the Evergrande. So from the proportion of what Lehman was at that time to the global economy to what it is Evergrande to the global economy, different scale. Alabi a lot smaller scale now, given that it was largely restricted to the Chinese market, and we know that there are some real estate residential issues that are being built up on the Chinese residential market, largely being a very local domestic play. It did not have ramifications globally, and hence, that crisis appears to have gone past us. And I don't think that is going to hound us in the times to come.
So India seems to be insulated. No crisis of inward investment and allocation to real estate in this part of the world because of the Chinese crisis. Is that true if I were to say that India would continue to get inward investments?
So that's a very good point, Kapil, that you mentioned. Clearly, we're seeing is that most of the corporates out of China, whether these are manufacturers, or whether these are institutional investors, whether these are just American corporates, they're saying we need a policy which is China plus one. It's a new word that I heard, China plus one. So we'll definitely be in China, whether it's for manufacturing, outsourcing, or whether it's as investors, but we do want to de-risk ourselves. So, is it that the fourth or the fifth manufacturing plant that they were putting together for outsourcing, will they continue to do it in China? Not necessarily. They are saying is that we want to look at one other alternative, because if something was to happen into China, then we have at least an alternate base. Now, is that base India? On the manufacturing side, I hope India has a very good prospect, and we will be able to attract a number of these companies who are wanting to outsource their manufacturing either from Europe or the US. But Kapil, to be honest, at this moment in time, they have a number of choices, whether that is
Correct.
Sort of Vietnam, Indonesia, Malaysia, India. So, these corporates are also looking at it that China plus one, it doesn't automatically mean that it is India, that plus one. We will have to fight, some of these other countries in Asia Pacific, and that's where I think support of the government is very crucial. And the way the policies that the government has been able to accommodate and adjust, we're seeing that they're cognizant of the opportunity that this has thrown on the manufacturing, particularly within the Indian environment, where the corporates are saying is that we may not set up our fourth or fifth factory in China for outsourcing, but look at something else. And if India has become that much more attractive, then India is our choice.
Excellent. And I will come to the policy side with you shortly. The recently concluded Dubai Expo, on the sidelines, we did hear a lot about India and India. Although our algo-based fund is very bearish on China, what was your take and about the investors at the Dubai Expo? Are they feeling very positive about India? Are they going to invest into the Indian real estate and different opportunities that Indian real estate opens up to them?
So Kapil, in 2012, I was doing these rounds with the investors in the US to bring them into India.
Right.
And in one of the meetings, I was sitting with an investor, and he turned his computer towards me, and there was a yellow post-it chit stuck on his computer screen. It said India, INDIA. I will never do it again.
Mm-hmm.
So that's the reputation on the real estate that we've had in the past. Now, when you're speaking with these investors, They're certainly saying is, well, this is very exciting and intriguing. We definitely want to come and have a play in India. And these are not words. In the calendar year 2020, and a couple, this is like the COVID period, calendar year
Right.
2020, we've had the highest foreign direct investment come into India in real estate. Nearly $6.3 billion, highest ever in the calendar year 2020. So it is not just mere sort of lip service that is being done by foreign institutional investors. They're actually putting in dollars. But where are these dollars going? These dollars are going into listed real estate entities like we've seen with Lodhas or with Shriram Properties. They are going into REITs. You may
Correct.
recall, Kapil, that during the pandemic, Raheja's listed their office REIT,
Right.
Brookfield listed their office REIT, and so these foreign direct investors are putting it in there, or they are putting it in hard asset classes which are income generating, which means offices, which means sort of warehouses, data centers, retail malls. Where the money is not going is the residential on equity side, because they are like, we don't want to necessarily take the development risk.
Correct.
They're saying is that we'll invest with a developer in a listed company, so whether it's Godrej or Oberoi or Prestige, etc. But we're not going to give equity money to the developer and take equity risk on the residential development. We are happy to buy completed offices, income generating assets. We are happy to buy completed warehouses or based on the income, but not necessarily to take residential development risk. And that's where we have seen that majority of the investors have been very keen on income generated office assets or then investing into real estate listed entities, but not into residential as equity base.
And obviously, with the money and the way the debt market has behaved in the last year, there is a lot of liquidity in the market. So, if there is a good project, I'm sure investors other than the foreign investors who may be a little bit risk averse would definitely invest. And we are seeing that the larger developers, their share of the total real estate has been increasing.
Absolutely. And this is the theme that Kapil, we're seeing across all sectors, which is consolidation. So the strong are becoming stronger and the weak are becoming weaker in the real estate segment as well. If you were to look any of these stakeholders, whether these are developers, whether these are NBFCs, whether these are intermediaries, everywhere we are seeing consolidation happen. And that's where the strong are getting a disproportionate benefit. I mean, look at it how Lodha got listed. And immediately after the listing, within a period of 12 months, he's done the QIP at a higher price, and the QIP has been a roaring success.
Correct.
We've seen Shriram Properties, getting listed. There are three or four more
IPOs.
IPO contenders on the residential side that we will see. So clearly there is enough money coming in for good quality developer, good quality stakeholders, because the investors do believe that consolidation is taking place with during this COVID time in any sector, and real estate is also seeing that consolidation. So the ability of the stronger to benefit more is where we are seeing attraction of the investors, and within the space these strong players are eating somebody else's lunch, as a result of which disproportionately getting the benefit during these times. So exactly what you're saying is that the ability of good quality developers to be able to get a larger share of the market is very evident. But my point is that it is not only just developers in real estate, it's also intermediaries, it's also funders where they are consolidating, and it's also industries outside real estate where we are seeing the consolidation take place, and the ability of strong players to be able to either buy out the weak players, or then the weak players just perish given their inability to withstand the competition.
Rightly put, Anuj. Yeah, I want to pick up on this point of consolidation. And, our algos are picking up very strong, signals, especially in sectors which were slow to revive during the pandemic, especially 2021, 2020, 2021, which had a lot of muted demand, such as offices, retails, malls, industrial, hospitality. And the investors definitely feel that there is an opportunity and a huge upside in this space, including healthcare, if you may. And we have also seen in our own sector, the healthcare, where some of the larger US brands, which a few years back when I was looking to get into a tie up after exiting one of my investments, they were very busy with the US. They said, we don't have time for India. And now suddenly you see a sign up with the embassy builders. And how are you seeing this whole consolidation? Is it a broad brush, or is it happening very strongly in a certain segment like commercial or in residential? What's your view and what's going to happen in 2022?
So I would say is on the real estate couple, if we start to peel the onion, on the
Correct.
commercial side, the consolidation had already taken place following the 2008 global financial crisis.
Correct.
By 2011, that consolidation had sort of pretty much got sealed. About 3 dozen top developers, who have nearly 80% of the office market. So that is
Correct.
how consolidation on the office happened. Then, came in the retail from 2008 when it started to really, I would say 2014-15, we saw the consolidation for the retail mall developers, and about a dozen and a half got left. That's
Correct.
how small the market became with the retail developers. The big part of the equation was the residential developers. And by the way, residential couple is nearly 80% of the Indian real estate market. And that
Correct.
had not gone through consolidation during the global financial crisis. That's what we have seen perhaps from 2016 onwards. Demonetization, RERA, GST, then the NBFC crisis, which started from the ILFS debacle, and now COVID. So
Correct.
all this has led to large scale consolidation on the residential. So to answer your question, the consolidation has taken place in real estate, but they have taken place at different times due to different reasons, starting from offices in 2008 global financial crisis and perhaps ending with residential, I would say is another 6 or 8 months more, and the sector would have fully got consolidated. The new segments that came in, industrial, warehousing, data centers, that
Correct.
was so specialized that there were only a few players who have embarked on this journey. And hence, by virtue of that, these sectors, the new sectors, are anyway very much consolidated because not everybody has come in. The bar for entry into a data center or in industrial is pretty high.
Correct.
And hence, we're not seeing herd mentality come into these sectors. Finally, I would say, is Kapil, it's really, really a great time for the Indian real estate, given the consolidation that has taken place, given the governance that has come in with the developers, given the compliance that the government has put in place, given the consumerism that is very evident, and hence the transparency in the sector that has been brought in has made it more mature and worthy of institutional investors, at least considering this as an asset class.
Right. There are a few things I want to pick up from your comments here. One, the whole cycle of consolidation is more or less over in the real estate sector, starting from the Lehman era. The second thing is that it's more to do now with more participation from retail than with the institution, correct? And thirdly, you are expecting newer models of ownership into the real estate sector in the future.
Yes, it is correct what you're saying is that, in my opinion, the consolidation is perhaps no more than 6 to 9 months away. I mean, it's a journey. It will still continue to consolidate, but I think the majority of the consolidation would have got completed in the next 6 to 9 months. across the various asset classes. Absolutely correct. Second, you're right that there are different typology of investors that have emerged. So, couple in 2006, 7, and then leading up to perhaps pre demonetization, it used to be high net worth individuals, used to
Right.
be speculators who would get into the market. These were rather individuals. Now we have institutions: Blackstone, Brookfield, GIC, CPPIB, RDR. These are the ones who are taking key stakes, key positions within the investor community. So suddenly that HNI that was there is starting to disappear, and we are getting all the North American, European sovereign funds come in and invest, which brings in a lot more credibility to the sector, and also brings a lot of patient money.
Right.
Because with HNI, the patient money wasn't there. With these institutions, we're getting a lot more patient money, also a lot more strategic inputs that they
Right.
bring into their partners within the Indian real estate, and that's the point that I really want to communicate is that we are now on a sort of an up cycle for the real estate industry, and to my mind, this is a very mature, this is a very considered structural upcycle that we are going to see over the next 5 years for the Indian real estate. Does it mean we're not going to have hiccups? I think as Indians, we're quite good in creating hiccups, even if we have none. So we will, through the journey, create hiccups. But I would say is, clearly this is in very safe hands at this moment in time. And I must credit the government. The way that they have brought in the changes within this sector has hugely benefited the well-deserved players as well as the consumer of Indian real estate.
Talking about hiccups, I wanted to talk about a few hiccups in the sector in the last year. Steel prices going skyrocketing, all the inputs that go into making of the real estate, cement. Is the worst over, or are we still going to see some upswings or volatility in these sectors, including energy, as we have seen in this current year? That obviously, dents the confidence of the developer on his ability to source at the right price at the right time. What is your take here?
So, if you were to ask me, my worst nightmare is the point that you have mentioned, Kapil, is the increase in the prices. The party is going very well at this moment in time. The demand is strong, good quality supply, mature players. Now, the party pooper is exactly what you have identified is this input cost. If the steel cost and the cement and the labor continues to go up, there is only that much ability that the developer will be able to absorb it.
Correct.
Following which, he's going to start to pass it to the buyer. Now, the buyer would have only that much ability to be able to absorb this in the sale price, after which the buyer will then disappear and say, boss, my salaries haven't gone up to that extent. I am not getting that kind of bonus. I know your cost of input has gone up, but I have no money to pay to buy. So my worry is that how quickly this input cost will continue to go up, and to what extent this will go up. The buyer has an ability to absorb sort of, I would say, is between 5 to 7% increase in the sale price, because over the last 4-5 years, Kapil, the prices of residential really hasn't increased. So, their salaries have gone up. The price of residential hasn't gone up, whilst the input cost has gone up. So the buyer is saying is I can pay 5-7% more, but am I going to be able to afford 25% more for the same product? Perhaps not. So that's where my worry is, that I hope the input cost does not continue to escalate the way that we have seen in the last 4 to 6 months, because the buyer at some stage will say that I cannot afford to pay you more than this, and I am not challenging that the developer is right or wrong. I'm just saying I don't have the kind of money that you are asking, and that's where the demand will go down.
One of the other things, my major worry was that interest rates were tempering down during the COVID because of a lot of flush of liquidity. And now with the FMOC and several other places where the tempering has happened, there is a perception that the interest rates will start zooming up. So far, the on the retail side and on the developer side, they could absorb this cost of increased cost of inputs by lower financial costs. Now that lever also for them is now going to extinguish maybe in 2022, which really means that the overall inflation or the cost inflation and the cost of the ownership to the end user is going to increase in 2022. How correct am I in making this statement?
Neeraj, Kapil, you are correct in that statement, but there's a big assumption in this, and the assumption is that the cost will continue to go up, inflation will continue to bite, and if on top of it the home loan rates start to rise because the repo rates are starting to go up and firm up, and the governments want to suck out the excess liquidity to control the inflation, then it has a double whammy impact.
Correct.
Because one side, the cost of construction and hence the sale price has increased because of the additional cost of construction, and the developer is passing that on to the sale price. And on the other hand, the buyer's home loan interest rate starts to increase, and that's when it'll have an impact on the demand.
Right.
Having said this, in the near future, I am hoping that we are not going to see this sort of double whammy. And then to some extent, as I said, is that the buyer is willing to pay a higher price because last 4 or 5 years they have had the ability to pay that additional cost. But given where the residential real estate markets in India were, the developer just did not push the additional cost, and hence the margins of the developers shrunk. Now it has come to that point that they cannot shrink more margins on their balance sheet, and hence will pass it on to the home buyer. So I am hoping that we're not going to immediately start to see dramatic increase in the input cost, or at least I'm hoping, and similarly not witnessing a very sharp rise in the home loan rates.
Right. There have been a statement by one of the industry don on the financing side from HDFC that a word of caution, what's going to happen in 2022. And he did say that there is likelihood of overheating in the real estate sector. Is this something people are anticipating or will anticipate and maybe temper down their purchasing or buying decisions?
Couple to the contrary, what we are seeing is the actual home buyers wanting to do their home acquisition as of today. And the reason for that is that they want to move to better quality building, more open spaces, balconies, bigger apartments, more number of rooms. They have perhaps 2 kids schooling from home, becoming very difficult to do it. And hence the need is today. So they are actually bringing forward the home buying than delaying it. And my thought is that given where the current mindset and human psychology is with the COVID, I think residential has become more of a social security. We've seen a lot of the millennials who used to rent now wanting to buy because their parents or spouses or boyfriend or girlfriend is pushing them to have a roof over their head which is owned by them. And clearly the buyer also knows that this is an attractive market dynamic where the rates haven't started to go up, the prices haven't started to move north, and the home loan rates are pretty cheap for them to be able to acquire the properties. Where we are also seeing the urgency is ready to move in. That means anything which is completed and unsold is getting lapped up by the home buyers.
Correct. Anuj, so I want to summarize our talk on 2022 outlook. Looks to me it's going to be a bullish year according to our algos. Also, 2022 looks to be up year, and investment cycles will continue to go on from here. What we have achieved in 2021. So, is that a statement which you will subscribe to?
I would absolutely subscribe to that. Kapil, what you're saying is that structurally, I think the market will remain strong. Even beyond 2022, I would say, to me, it does look like at least sort of 4 or 5 years, a very strong residential uptake. Are there going to be road bumps? There will be road bumps in it. Would there be, like in every class, there are good students and bad students.
Correct.
And hence, there will be a handful of bad players within the Indian real estate industry, despite the cleansing. And,
Right.
those guys would create some hiccups still. But largely, I would say this is for good quality developers a fantastic time with robust demand. Uh, Supply has shrunk into a few good quality, strong developers, and that the speculator and sort of short term investor has disappeared completely from the market. And this is a pure end user game, and hence a very sustained recovery that we will see over the next 4 or 5 years.
Excellent and well summarized, Anuj. I want to shift gears a little bit, Anuj, on what you called as consumerism earlier in your talk. You see, earlier I used to get a lot of proposals from various developers. Invest in this commercial thing, invest in this, itna fixed return, or this much fixed return and this much upside and whatnot. And as you said, these sort of proposals are now drying up because of entry of large scale institutions and foreign institutional advisors. But for a retail investor to participate, a new sort of vehicles are coming up. You're seeing fractional ownership, you're seeing REITs, you are seeing real estate funds for high net worth individuals to invest their money, who then manage that money to invest into real estate developers. How is this consumer cycle expected to mature further in 2022? What's your take here?
So I think we will continue to move towards maturity. There's no doubt about it. There are three things that couple why I say that we'll continue to move toward maturity. One is the compliances that both at the central and the state government they put onto the real estate. This is what SEBI did after that Ketan Park
Ketan
scam.
Parekh, yeah.
So this is that the compliances that have been put in to make the industry a lot more robust. So that's the one that there's a lot of safeguards. I mean, when we go bowling, these are the rails that are up now, and they will not let the ball go in the alley. With the way compliances have been done now, somebody wants to, if somebody wants to do play dirty, they'll anyway play dirty. But otherwise, the compliances have been put in place. The second is this social media and the ability of the buyer to be able to make sure that there's enough noise in the market, which then damages the product or the brand if the consumer hasn't been handled as per his or her expectations. So, previously this social media wasn't there.
Right.
Today, social media is there. Plus, a lot of the millennials are going on to the social media before they're making their position and looking at what the social media is saying about a particular brand. So that's the second one where the brands are going to be very conscious and cautious because they're dealing with millennials now, and these millennials are very, very, very prone to looking at the repute of the developer on the social media before they are doing the acquisition. And the third I would say is couple is the judiciary, who's been pretty straight with the real estate developers. And we have seen across the board, whether it is NCR or Western India, the important role that judiciary has played in being able to cleanse this sector. And developers have understood this, that they are no longer going to be able to play the way that they were playing before. So either it is like shape up or ship out. That's the way that the theme is going on. And many good qualities have shaped up and benefited. Some haven't been able to, and hence they're moving out of this sector.
So fly-by-night operators and players who have been having a shady operations would be probably weeded out.
Absolutely correct.
I want to take up a small point of Uberization of real estate sector in the consumer's hand. You see, there were a lot of people who were looking at Bitcoin based funding and ownership and secondary market of movement of real estate in an open manner, in a very sustained manner. And obviously, there has been talks of introducing or banning initial token offers and block Bitcoin in India. Is this something that would be affecting the real estate sector as well? Because then I can't buy tokens and I can't own real estate and I can't trade into real estate as a consumer.
So, Kapil, real estate is still not as sophisticated an investment product
Correct.
as the way crypto is. I think it will be some time away where we are going to be able to buy or sell real estate through crypto. Would it come? I'm sure it will come in. But even at a global level, I mean, India is that much more removed. But even at a global level, we haven't yet seen trading of real estate as an asset class with crypto. So, to answer your question, the adverse ruling on crypto is not going to have any impact on the buying and selling of real estate because we're not seeing the trading within real estate being done through crypto.
Correct. So I understand that the secondary markets for real estate at the consumer end may take some more time. It's just the primary sales at this point in time,
Correct.
which will fuel the growth of the real estate sector.
Absolutely correct.
Hey, I want to shift gears a little bit and talk about a lot of startups which have started entering the real estate sector using tech and new age technology like artificial intelligence and using technology as a way to manage real estate and change or transform the whole product or the real estate development as well. What are you going to see? Are you've also invested in a few startups in this sector as well using tech? What are you seeing? How are these players going to shape up? Are we going to see a unicorn on the real estate, not the zero broker and all those sort of people who are just intermediating, but real value addition into the real estate sector value chain? Are you seeing some trends appearing and which could probably be mainstream next year or maybe the year after?
Certainly, Kapil. Real estate is a very large asset class. It is one of the few assets that have not been disrupted by technology. And I do feel that the way PropTech has gained prominence even before COVID and much more during COVID, that this is here to stay as PropTech, which will bring in more efficiency, more productivity, to an extent disrupt as well the traditional way of doing real estate business. So globally, if you were to see, we have number of unicorns in the US in the PropTech
Right.
space. Given where the India market is on the real estate, it's only a matter of time that you're going to see much of the disruption coming in to the real estate through technology. I mean, Kapil, we started 4 years ago. We're selling, and these are hard sales. It's not lead generation, selling. Over
Correct.
18,000 apartments today, a year. 18,000 apartments. You can't do this without tech, without digital. And the largest agent prior to that would have sold, I don't know how much, 1,000, 2,000, 3,000 apartments. And that also they may have taken, 10, 12, 15 years to build it up. So definitely the PropTech space is very vibrant. It's a big, large segment which remains to be disrupted by technology and to bring in more efficiency and productivity, thereby delivering a lot of dollars to the various stakeholders. So I would summarize by saying in America we've seen a number of PropTech unicorns. In emerging markets like India, it's only a matter of time that you will start to see, having run a PropTech business now, a solid PropTech business which, by the way, makes huge amount of profit for us. It's not one of those businesses which is a cash burn business. A hugely profitable business, and I see no reason why businesses like these will not prosper and will not contribute to the Indian real estate, successfully saving money for the various stakeholders who are connected with it, and the business being meaningfully profitable.
Hey, I want to dwell on this point a little bit. We do expect some game changers. And obviously, the millennials are people who bet on sustainability, high tech, health, and well being. Are you going to see some game changers emerging in the real estate sector maybe next year or the year after or maybe in the medium term?
So there will be number of disruptors. Exactly the points that you have mentioned. Sustainability. The youngsters today are very clear that they do want sustainable environment, sustainable development. If you look at most of the offices, good quality offices, they will have LEED certified, platinum or gold standard, put outside, so that the people who are entering the building know that this is a sustainable building. We're seeing that ask come in on the residential today. So the disruption and the way the progress of the Indian real estate sector has been over the last 20 years is going to be very different to what we are now going to see over the next 5 years, because the information technology, the millennial who are coming today and buying the residential real estate are very international, very cosmopolitan, and they are wanting to see the same value adds which are being brought in Western world on the real estate being implemented in the Indian market, which in the past wasn't the case. But given where the Indian workforce, in terms of its cosmopolitan and international nature, has arrived, they are wanting very quickly the best practices of the mature markets to be implemented within the Indian real estate market.
Well summarized, Anuj, and I believe there is going to be a very fast transition to global levels like the US, Europe, and other advanced economies in the Indian real estate sector.
Absolutely correct. Absolutely, and that's let's hope we continue to progress well, deliver well, and ensure that the customer is kept at the first priority by all the stakeholders concerned.
So, customer centricity or getting the whole customer journey around the real estate would be critical using tech, I guess.
Yeah, very true.
Anuj, what are your expectations from the budget and the finance minister for the sector in the coming year?
My expectation is, how can we continue to bring in more transparency within this sector? How can we attract more foreign institutional capital into this sector? And how can we bring in equity into the residential real estate sector? Equity in office and retail has very much come in through the REIT format. Equity in the residential is coming through the IPO, but there are other means by which we should be able to bring in international equity into the residential development sector. So that's the expectation on a broad terms from the budget, to be able to bring more liquidity, more sustainable development, and more transparency within the Indian real estate sector.
Do you think there would be another stiff regulation to cap rogue money and incidents like Panama Papers, and a little bit more scrutiny for the developers, like we as fund managers go through scrutiny, and a regulatory body that looks into all this, which will come soon into the real estate sector?
I think the sector has gone through a lot of cleansing already, and given the way that this government is functioning, is very clear that they're not going to allow anything which is sort of immoral within the trade. So I do believe is that if there is anything which is going to be non-transparent and is going to cause sort of grief in the long run, compliances will come in. to be able to address and ensure that these any bad practices that are there are immediately culled and not encouraged.
Last question before I let you go. Who are the developers or the players, because you mediate a lot, that you're going to bet on for the future?
A number of them, I would say, is on the listed space. Number of developers, I really value them. I mean, Godrej, Lodhas, Prestige, Brigade, DLF. Many of these that I would say is very pedigree, very quality conscious, very focused towards the delivery side. In terms of the product, I would continue to focus on the three large segments: residential, office, and retail. To me, there is a lot more that needs to be done within these three asset classes.
I really appreciate your time, Anuj, and thank you so much. And before I let you go, I'd like to thank your team and our team for making it possible, our sponsors, and I do wish you and the real estate industry as general happy and prosperous 2022. Thanks, and have a nice day.
Thank you very much. Thank you. Bye bye, Kapil.
Bye.